Um, as Allison said, I'm Laurie Kuzneski. I'm with Kuzneski Insurance Group, and I'm here today to talk to you about insurance for startups and small businesses and what you need and when you need it and why you might need it. And just to give you sort of a heads up, so if you're in the planning stages of a business, or you're a little bit further along, sometimes we see companies that come to us and say, oh my gosh, I should have had this a while ago. And we can help companies through that. But this is to kind of give you that education of what you might need to think about moving forward as you grow your company. A lot of people have never bought insurance before, so they don't understand what the process is or how it happens. So I just want to give you a little heads up on how that all works, and what you might need to think about as you're building your business. So can everybody see my screen? I'm going to take that as a yes. So, and if you
yes, you're good.
Okay, good. If you have any questions, feel free to put them in the chat, interrupt me. I can pretty much go with the flow, so you won't throw me off. We're going to talk about insurance for startups and small businesses, what you need and when you need it. And you might think, well, what does this insurance lady know about entrepreneurship or startup companies? But I had my own startup company. I worked for a large bank, and I decided to stay home with my first daughter, and really didn't go from being a vice president to stay-at-home mom very well. So I started Miss Laurie's Gourmet Kitchen, which was a recipe for my family's peanut brittle that I started selling, and I thought it would be a cute little cottage business. And I was making 6,000 pounds of peanut brittle and shipping it all over the world at Christmas time every year. And so it kind of grew to a second kitchen in my home, to employees. And then I started teaching cooking classes for kids, and sort of had this disconnect between teaching kids about healthy eating and then making peanut brittle. And we always said it was like the kindergarten teacher that sold crack. It just didn't mesh together anymore. So in the essence of time and everything else, market trends, I opted to stop making peanut brittle, which upset a lot of people, but it was the right thing for me and my business and where I wanted to take things. So I guess you could say I pivoted and just started teaching cooking classes at that point in time. I did that from 2002 to 2018, when one of my students graduated from culinary school. And I decided that was enough time in that business. And plus, I'd been working full time at our insurance agency that is 55 years old, but my husband and I run it like a startup. So we are constantly looking for new innovative ways to do business, new innovative ways to help our clients and see where trends are going, trying to be where the puck is going to be, not where it is. And so that's how we do things. We're angel investors. We've been investing in startups for over 20 years. And I work with a lot of women-led companies, and do a lot of investing in women-led companies as well as guy-led companies. I'm not I don't pick one over the other, but I do work with a lot of groups for women-led companies. In my spare time, I do a lot of things, a lot of fundraising, and a lot of working with startup companies to help them grow their businesses. But then I also am a trustee of Indiana University of Pennsylvania, of Indiana Regional Medical Center, which is our hospital here, and our Chamber of Commerce. And I tell you those things because if there's something in my bio that could help you, or a connection that I could make for you, please feel free to reach out to me. I'm more than happy to do that. So I always like to let people know that I have that in my background. So that's a little bit about me and our agency. I do work with my husband, and a lot of people say never invest in a company where it's a husband and wife team. And can't dispute that sometimes, but for the most part, it's a good thing. So, so insurance basics. Let's get into this. What is insurance? We always say insurance is something that you buy to help you sleep at night. So it's transferring the risk from you personally, your company, to an insurance agency or an insurance company to cover if somebody slips and falls on your property, gets hurt by your product. It covers that cost. How do you get it? Typically, you can go online and get things. There are companies out there where you can fill out a quick application and get your policies. What we find is, and sometimes we'll tell people, hey, just go and do this. It'll be quick and easy for you. But we do have some companies, especially ones that spin out of CMU, that are doing things that are not the norm. And so, you might sign up for, a policy online and say, hey, I'm a software company, but if your software is, making autonomous vehicles drive, that's going to be an issue. So it's good to talk to somebody before you go down that path, just to make sure that what you're doing matches up with what the company is insuring. And you need this because it's a way of protecting your assets, your company, your ideas, your product, and making sure you're protecting your investors. And so, if you don't have this insurance and something goes wrong, you could lose your whole company. So it's really important to make sure you have these things. And then what does it cost? This is always a big question. What does insurance cost? And I'm going to give you the answer. It depends. It depends on what your product does, what types of insurance you need, what limits of insurance you have to have. So CMU, if you're taking technology and spinning it out of CMU, they have specific requirements that they have for insurance. Depending on if it's, a product that's going into the body, that's going to cost more than, technology that you're using for an app. So it really depends on what you do. And it's really important that you work with somebody who understands what it is you do, because if the insurance company doesn't understand it, they might rate you wrong. They might decline you because they think it's a bigger risk than what it actually is. So it's really important that you make sure that you get a clear understanding of what you do across to whoever you're working with on your insurance. All right, so let's talk about the life cycle of a business. So we see businesses in all phases of their life cycle. So you're just getting started. We worked with companies that literally was an idea on a napkin. Here's what I'm thinking. I've seen companies that have gone the whole, I've got my business cards, I've got my logo, I've got everything ready to go. I'm ready to start selling. And then we realize, oh, you might not be insurable. So we see all sorts of facets of people just getting started, or maybe they have started. And like I said before, they come back and say, I should have had this before. When you're taking on investors or raising money, that's another area where there's usually some requirements for insurance. When you're building your products, or you're opening your doors, or you're selling your products, that's another stage. When you're trying to attract talent, and hiring people, that's another stage where we typically look at what insurance needs do you have. And then if you're exiting, or if you're just running your business moving forward, some people don't want to exit. They just want to have a company that they run forever. So those are the sort of the different stages of the life cycle of a small business or a startup. So we'll talk about what you need in each of those different areas. All right. So if you're just getting started, I alluded to this before, ask yourself this question: is this business idea insurable. We have seen a few where it was not an insurable risk that any insurance company would take. So, we go to the regular standard markets for insurance. And if they say no, then we go to the excess markets where they might insure things that are a little riskier. So think of like, if I'm I built a gaming app for my mom's iPad that she plays. That's one risk. I'm a company that makes fireworks. That's another risk. And so so we have to look at what it is you're doing, what is the risk. And if you're doing something that is that seems kind of risky, like I said, if you're putting something in someone's body, if your product can harm someone, typically it's going to be more expensive than, like I said, if you just have an app on the iPad. So, when you get a quote for insurance, if it seems really inexpensive, there might be a problem with that. So, just so kind of understand that, making sure that you know what exclusions there are in your policy. So once you ask that question, is this insurable? Then you can start talking to a broker and see, what might this cost or what insurance might I need if I was going to do this, just to give you an idea as you're putting your financials together. Who is going to tell you that you need insurance? So I can tell you that you need to get insurance, but these folks are going to require insurance. So if you are renting space someplace, your landlord is going to make you have insurance. If you're spinning tech out of a university, they're going to require that you have insurance. Or if you're using their labs, your clients, if you're going to sell to Target or something, they're going to require that you have insurance. The state that your business is in has certain requirements for insurance. When you have employees, they're going to require you to have insurance or want you to have insurance. And then your investors, or if you're getting money from a bank, they're going to want you to have coverage of different types. So typically what they want you to have, your landlords, your universities, they're going to want you to have general liability, product liability. Sometimes that's called a business owner's policy or a BOP. When you get employees, they're going to want you to have benefits. The state is going to require you to have workers' comp. And, if you're doing something online, you're going to want to have cybersecurity insurance. And another big one is auto insurance. So you may have auto insurance personally, but if you are doing business and driving your personal car, or your employees are driving their personal car for business, if they get into an accident, a lot of times they'll find out, where were you going? What were you doing? I was going to a meeting to meet with, an investor for my company. Then they can come back on the company. So adding auto insurance, which is not very expensive, to your general liability policy is kind of a smart thing to do. All right, so let's talk about when you're taking on investors or getting funding. So any good investor, advisor, board member that works with your company should require you to have directors and officers insurance. So every board that I sit on, I always ask to see their D&O policy. Make sure that the board of directors is covered. And what this policy does is, if someone sues the organization, this would cover the legal fees for the board members. So my husband was on the board of a bank, and the bank got bought. And the day that it was announced that it was being bought, it was a publicly traded bank. There was a big lawsuit, and apparently there's attorneys out there who look for these acquisitions, and every time they do, they sue on behalf of the shareholders. So my husband was listed in this lawsuit and totally freaked us out when we saw it. But it was, something that I guess happens quite frequently, and it was all covered under the directors and officers insurance. So board members, especially when you're taking on investors, sometimes you get an investor who doesn't like the way things were run, or you might have an unsophisticated investor who doesn't understand why they're not getting their money back right away, and that sort of thing. Having directors and officers insurance is really valuable to protect the officers of the company and the board that's working there. If you ever work with a nonprofit, directors and officers insurance is just as important there. It's typically cheaper than it is for a corporate D&O policy. But again, something that is very important to have. Your investors might require you to have key person life insurance. So if you have somebody, who's the mad scientist, who's the only one who knows how to do whatever it is your company does, and that person gets hit by a bus, having key person life insurance on that person that's owned by the company, and the company would then receive that money to keep the company afloat while there's a transition until you can find someone else to come in, or somebody else can run the company. But it gives it that sort of influx of cash to keep things moving along if something happens to a key person within the company. All right, so you're going to open your doors, and so whether that's you're getting office space or lab space, or you have a store and you're going to open your door, put your shingle out, you want to have general liability insurance. This is going to cover somebody else, not you, but somebody else. So if somebody gets hurt at your facility that's not an employee, if they slip and fall on ice in front of your building, that's where your general liability insurance is going to come in. It's going to cover your equipment. So if you have computers and things like that, that's what that's going to cover. Product liability, if you're building your product, sometimes universities especially will require product liability, and sometimes companies don't have a product yet. So occasionally we will push back on that and say, could we get the general liability now and add the product liability once the product is further along or is ready to go, because product liability can be expensive depending on what your product is. So we always try to make sure that when a company is starting and funding is not as great as it may be, down the road, we try not to have them be hampered by buying insurance before they actually need it. And sometimes insurance companies will actually say, we're not going to insure a product that doesn't exist yet. So sometimes we can't get it for you because you don't have an actual product. The idea of a product isn't always insurable. So we have to sort of balance that out with the universities, but having, coverage on your product, depending on, if you have, if you're selling that product to someone else, they're going to require that you have it. So it's definitely one that falls in. You can get your general liability right off the bat, but then layering on product liability at the right time is important. If you are doing consulting work, or you are a software company that creates a software that somebody uses to run their company, so like the software that Hershey was using to track their inventory didn't work, and they had Easter and they didn't have enough chocolate to produce all of the chocolate they needed to make because their software blew a gasket. So if that happens, they lost all this money because nobody's buying, Easter bunnies after Easter. So that was a claim against that company, and that would be covered under Tech E&O, which is errors and omissions. So if you make a mistake, think of it as sort of like malpractice insurance for a doctor. If they make a mistake, their malpractice insurance responds. If you have a software product and it malfunctions or makes a mistake, then your tech E&O would cover that. So those are some important things to understand. And those you start typically the general liability very early on and then build on top of it. All right, so if you are trying to attract top talent, and as the gentleman mentioned before, culture and all of that is extremely important. So how you treat your employees and what you do for your employees is important as what your company does and the good that you're doing in the world. And so we've seen companies that have very it's competitive to get the employees that they need to run their company. And so they say, you know, we want the best of everything. And we don't care what it costs because we need to bring these people on. So, you know, employee benefits like health insurance, dental, vision, life and disability insurance, voluntary benefits, those are all group products that some people, especially very experienced people, expect when they go to work for a company. And we've had startup companies that, you know, might have 30 employees, and we set up their benefits and they were like, oh, we're a real company now. I feel like as an entrepreneur, I can go out and I'm legit because I have benefits that I can offer to somebody when I hire them. And, you know, so I think when you're a startup and you're, you know, Google, it's you have to balance those sorts of things because they're getting lots of perks over here. So what can I offer at my stage to employees to get them to come here? And so, you know, benefits is really important. It might be a 401k, stock options, all of those different things that are really important. So those are things that your employees are going to want. Coverages that you want to have at that point in time. Workers' compensation, which covers an employee if they get hurt on the job. It's based on your payroll and what type of work people are doing. So if you have a software engineer who's sitting at a computer all day, pricing is going to be less than if you have somebody who's running a forklift or digging ditches or something physical, contractor, something like that. So it's, you know, based on payroll and what exactly the people are doing. But that is something that you have to have. And a lot of people say, oh, well, if I have W-2 employees, they're covered under workers' comp, but if I have them as contractors, I don't have to provide workers' comp. And that's not true. So if those folks that are independent contractors don't have workers' compensation insurance on their own, then you are required to give that to them. I think it might be like $1,200 a day is the fine if you don't have that insurance. But it's something that would cover somebody if they got hurt while at work and would cover their costs. Another really important one is employment practices liability insurance. So this covers you if, so you fire somebody, in Pennsylvania is an at-will state, so you can fire anybody for any reason, but they can also sue you for any reason and you have to defend yourself. So this covers you, covers your legal fees for the price of a deductible. And they usually give you an attorney and everything and help you through the process of fighting that lawsuit. But this is another one that's really important. Sometimes it's lumped in with your directors and officers insurance, but really an important one to have once you have employees. I'm working with a company right now that's always had family. It's been a family business and they've always had family members. And now that they're getting ready to hire people outside of the family, because I think there's nobody else in the family to work company, they're, having to look at things like this. And that's not to say a family member or your best friend or your college roommate couldn't sue you. We've seen that before. We have two founders and things like that. But it's really important to have this. It protects you from I can tell you from experience, from a very stressful situation. And so everything that you do, having consistent policies and procedures is a free way to ensure that you won't have claims from some of these things. So making sure you have a clear HR handbook or employee handbook, that you have really good onboarding procedures, that you have all of your employee files up to date, all of those sorts of things, and that you are consistent in how you do things. So you don't say, oh yes, you can have vacation, you cannot have vacation. It's got to be, this is how, we do vacation for everybody, or these tiers of employees, things like that. It's really important. And I always say this is a free way to ensure some peace of mind for your company by having consistent policies and procedures. Very important. All right, so if you are going to exit, you're either going to sell your company, and that's an awesome thing, but what happens when that does? So if you're staying on with that new company, you'll probably merge into their benefits. Sometimes we have companies that get bought, they keep their benefits because maybe they're in Pittsburgh and the company's on the West Coast, and the company that bought them from the West Coast realizes that prices in Pittsburgh are much cheaper, so they keep their benefits and insurance here. But ultimately, usually it's like, well, it's a hassle to do two things, so we're just going to merge everybody together. Sometimes, if you sell your company and you exit the company after it's bought, you need to look as an entrepreneur, is making sure that you replace all of your coverage. So do you have health insurance, life insurance, those sorts of things? Some of these products are portable and you can just take them with you and pay them on your own. Others need to be replaced. So that's something that is really important as you go through this process. Making sure you have good financial planners, banking relationships, insurance relationships, and attorneys that can help make that transition a positive one. If you are shutting down your company, what has to happen? So making sure that when you let your employees go, they have coverage that they can take with them, that they're set up to pay for COBRA insurance for their health insurance, things like that. There's also something called tail coverage. So like your directors and officers policy, when the company gets shut down, something could come in after the fact. So maybe 6 months down the road, somebody says, hey, I was sexually harassed while I was there. They could come back and file that claim. And when you have tail coverage, it covers you for a certain amount of time after the business shuts down. So sometimes that's a good thing to have when you're exiting your company, or even if you're merging into a new company, they're going to probably want you to have that so they don't have to take on any risks that your company may have incurred before they bought you. And then if you're going to continue, running your business, you're just running your business on the daily, important things that you need to do to maintain your insurance, update changes with your carrier. So if you move, if you have employees, like with COVID, everybody's employees scattered. And when that happens, you have to update your workers' comp insurance because they're working in a different state than Pennsylvania, things like that. You need to file claims immediately. Don't wait 6 weeks and say, okay, I'll get around to filing that claim because we had a flood. They need to be done immediately. Make sure you pay your bills. This is a big one. And during COVID, we saw a lot of people who were, oh, well, I'm not going into the office. I didn't see the bill come in, and their insurance got canceled. That can be very difficult getting it reinstated. Some companies will make you go through the whole process of applying again. Some will decline to let you apply again. When that happens, we had a real hard time the past year and a half trying to get people reinstated after their insurance was canceled. So, if you can set it up on auto pay, set it and forget it. That's really a good idea. But just make sure that you're paying those bills. And then review and renew your coverage annually. So, your health insurance, all of those benefits renew on an annual basis. So you pay it by month for an entire year, and then you renew it. But review it when that happens. Make sure it's still covering what you do. If you've changed direction, we've worked with companies that have completely pivoted to something different. And when that happens, we need to make sure that that policy that they had in place will still respond to what they're doing. And so, just making sure that nothing has changed. You haven't added a new piece of equipment that we need to make sure gets added to your policy. We buy a lot of artwork for our office, and when that happens, I have to make sure that it gets added to our policy so that it's protected. So those are certain things that you need to do when you add employees. Make sure that they get added to the insurance. And then continually review your processes and policies. So, you can get a handbook done, and it doesn't mean you have to redo it every time something changes, but adding an addendum to your handbook is perfectly legal and the easiest and best way to keep your handbook up to date and your policies up to date, because sometimes you don't think of everything and then something happens. We always have that one employee that pushes the envelope on everything, and you're like, you know what, this is going to be a new policy in the handbook, because they just don't seem to get it. But then making sure that when you're hiring people, your hiring practices are really good, and that you're hiring people that fit the culture of your company, that they understand your policies and procedures and why you do things. It could be for safety reasons. It could be, this is just how we have to do things to make sure that we run in an efficient manner. So just be continually reviewing those, updating them as needed. And, when I sit on our hospital quality committee, anytime there's an issue with a patient, somebody fell, there's a whole process that they go through to make sure that that doesn't happen again. And so as you are running your company, if something happens, make sure you deal with it right then and there, document it, put it in someone's file, and then debrief it and make sure that you have figured out how do we keep this from happening again. And I think that's one of the best things that you can do, because when you have insurance, you don't want to ever have to use it. It's one of those things. It's like life insurance. You don't want to have to use it, but you have it if you need it. So so that is my presentation, and I am happy to take questions. And like I said, you can link into me, you can email me, you can go to our website and see everything we do. We've got a lot of blog information. So if you have questions about, should somebody be a W-2 or a 1099? I know there's a really good 4-part blog post out there on that. And so lots of good information. We try to educate as much as we can, because we think educated clients are the best clients. So I don't know if there were any questions in the chat.
Does anybody have any questions? We don't have any in person. I didn't know if we had any virtually.
Let's see here. There's, I need to bring part-time labor into my own residence to work on a product. What insurance options are appropriate, available, unavailable? So sometimes you can add coverage to your homeowner's policy if you own the home. Or it might be wise to look at just a general liability policy if you have a business. But that is something that I would want to look at, what they're doing, hours that they're working, those sorts of things, to make sure that all the necessary things would be covered. And so that would be one that would be a good conversation to have offline, and I could get our expert on that. But I know when I had employees working here at my home, I had my general liability policy or my business owner's policy, and I was also covered on my homeowner's policy. And I'm married to an insurance guy, so everything was covered. So and I also had workers' comp, and they, that was part-time employees as well. So but that might be a good question to really dig into all the details to make sure you have everything you need. I think those were the only questions in the chat. Anybody else? All right. Well, thank you. I appreciate you letting me come here today and spend some time with you. I hope it was helpful. And like I said, if you have any questions, feel free to reach out. I'm happy to guide you in any way I can.
All right. Thank you, Laurie.
Thank you. Have a great day.
You too.
Thanks.
Bye.
Bye.